presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling out here with us. Right now, we have the Dow Industrials down 22, Nasdaq off 18, S&P's off 4. We get the gold contract flat at 12.92. Silver is down 16 at 31 rather. Bonds, they continue to basically go topside in a huge way. Yes, they had wide price spread, accelerated volume once again. The 10s at 125.26, the 30s at 127.20, and King Dollar, she's flat out here, trading at 80.05. If you haven't test drove, folks, the Nadex platform yet, come over to our website at TFNN. You'll see the banner on the top, on the side. You hit that banner, bring it up. It'll take all of about 3 to 4 minutes to bring an account up. You can bring the account up. They will put $25,000 worth of paper money into that account. And bottom line, you'll start understanding how these contracts works. You've heard many times the promotion, and the promotion basically says your trade is your stop. That is the bottom line. It's defined risk, folks. And in this market, that is one beautiful. And in any market, it's a beautiful thing. But the bottom line is that what we do have, we get volatility back in the market, and that's where it's at. Our phone number is 877-927-6648. Now, let's go over the market from yesterday. Bottom line, folks, this is what you have. If we go take a look at the SPY, you can use the SPY first to see the correlations that we have been talking about. The SPY. So what does the SPY do? This is what we did out here in the SPY. I'm going to go right back to the first high that was generated out here in March, because what we had is that we had a sideways move in the SPY, in the Dow Industrials, going all the way back to March 1st. First high that was generated out here on March 7th, you did 114 million shares. The high there was 188.96. What ends up happening after that? You go downtown. You go downtown with 153 million versus uptown 114. Okay. Bottom line, get another expansion topside. Topside the second time. This is the one that gets really interesting, and this is why this had to get tested. The second time up, folks, what we did is that we got 169 million shares at the high, but we sold off the high the exact same day. That's always a tricky deal, and the tricky deal inside of that is that, okay, do you have a high in volume or just sell off from the high? Bottom line, you had a high volume high. That's what you had. You come down again on volume, however. Okay, so that was the confirmation that, number one, the trend is downtown. They're unloading equities in a huge way. And when we came back downtown, it came back down with 167 million shares. So you got to remember, the high that was generated there was 189.70. Well, what ends up happening? You start going topside again, we get to 188.40. We did that on the 22nd of April. Now, this is where it's crucial, and it's subtle, but this was saying once again that, guess what? They're unloading equities in a huge way. So 5 days later, what ends up happening? You go downtown with 135 million. Okay, so you check it out. You're uptown with 85. You go back downtown with 135. Bottom line, that high wants to be tested, folks. You got to remember, that high at 169 million wants to be tested. Well, it makes it. It makes it, folks, with 66 million shares. So the 66 million was going into the 169, couldn't handle it. What ends up happening? Here's your confirmation. And the art of time in the trade, folks, you're always getting the confirmation both ways. Doesn't mean it's going to be correct all the time in what you want, but the bottom line is that it's going to tell you up or down. You're looking for that confirmation. What ends up happening yesterday? Bob, boom, downtown with 154 million. Now, there's a couple different things that happen here. That's the S&P has stayed at these highs. You have two separate benchmarks. Your first benchmark is the April 11th low. That low out there is 181.31. Your second one is the February 5th low, which is 173. That's a long way down for the S&P, folks. Let's go over to the small caps because I want to show you the correlation here, and the correlations are really important to understand. So if we first just look at the indice, the actual correlation inside the Russell 2000, what we have is this. Russell was the weakest indice. That NDX 100 was right behind it. The Russell had gone from a price point of 1212 and hit 1082 yesterday. The low in the Russell is 1082.71. We hit 102.53. Okay? Now, guess what? You're going to, well, first off, if we take a look at the volume characteristics, we knew that February 5th is the benchmark. Okay? So the Russell hit the benchmark first. Now the next thing that you're doing when you're looking at markets, you're saying, okay, we're going to get a bounce out of this benchmark. What are we going to do out of this benchmark? Well, what you have, folks, is this, which is really cool. Well, it's cool if you're a bear. It's bogus if you're a bull. And this is what it is. This benchmark on a weekly basis is going to blow away the benchmark from the 5th of February. So that is basically saying that, guess what? Yeah, you get some kind of a bounce out of here, sideways move, today is just a beautiful thing. I do not want to see basically lower lows out here today. Well, on the weekly, we'll still have higher volume, but I didn't even want to see them on the daily. The reason being is that summer trading has already started. The Northeast, the Midwest, they've had terrible weather. We're going to have lighter volume today. We had huge volume yesterday in the indices as well as in the ETF structures. So what that sets up in the small caps is this. That sets up you just take the bottom of that, which is 1082. You take the top, which is 1212, and what that's 135 points. You take the $1.35 away from the 1082, and what do we end up with? 9082, 950. So 950 is your first target for the small caps. And 950, guess what? Brings you down to June of last year. Now, June of last year, folks, okay, 942 is the swing point. That's where this baby's going. We go over to the Russell 2000. We take a look at the Russell 2000. This is what you have, with the NDX 100. This is what you have with the NDX 100. You basically had tested your downdraft out there that was established on April 4th. April 4th, we did 131 million shares. Guess what? You tested it with 30 million. That's insane, folks, okay? Then what ends up happening? You come off that area with 59 million. Bottom line, this is a monster ABC down. Your A point on this is 91. Your B point is down as 83. 7, you get $8. Your C point is 88. That means we're going to be running to 80 on the next leg down inside the marketplace. Real action, folks, just all over the place. Darrell Martin, what's going on?
How's it going, man?
That's going great, man. You having a good day out there?
Yeah, just knocking some things out.
Well, there's no doubt that we get some nice volatility inside the marketplace. And, folks, what you can expect here, the benchmarks that are out there on the S&P, this is going to be like a little trader's paradise because what happens on the way down versus the way up is that the elevator basically doesn't stop on the way down. On the way up, it stalls, it stalls, it stalls. So I suspect what you're going to have here for the next 3 or 4 months is some fast and furious trading. And that's going to be right across all the boards, meaning, the commodity, the oil market hasn't fallen apart yet, but I suspect we're going to have that. In fact, if we go over to oil right now and just take a look at this for a second, what we had with oil, let me just see this, baby. Yeah, this is sweet. Now, this is subtle, so check this out. So the day, let's see, what day? We're Friday. So Wednesday, you got to a high with 234 contracts, and then we came off it yesterday with 276. You're going up today with nothing. I like that one. So I'd wait for a test of that 102.65.
We've been getting that bounce off there quite a bit lately. So it's like that little...
Yes.
A lot of oscillation. We were talking about that last Friday. It's like, all right, it's working on falling apart.
Yeah, no, it is. And what you're going to see, folks, is this, is that when you get fast markets, which we have right now, these swing points and these numbers, they hit very quickly. So what you want to make sure you do is set up that trade before you get into it. If you're trading with the Nadex product, which is a beautiful thing, is basically those contracts, you get near the top of the box if you're selling it, you get near the bottom of the box if you're buying it. you can expect not every hour fast moves, but in the course of the day, you're going to get fast moves. The real key inside from now, until we're getting into the summer, is that Tuesday, Wednesday, Thursday, Sunday night would be all right. Tuesday, Wednesday, Thursday, that's where there's some real action inside these marketplaces. Monday and Friday, you're going to see slightly slower markets out here. I really like what's happening today. The reason being is that it took a huge amount of energy, folks, to do what the market did yesterday. The S&P's got inside the range, did everything above, and this is exactly what a bear wants to see, meaning a sideways move, a move that more than likely would go a little topside with dramatically lighter volume. Oh, look who we have. I lost my bet to Elka, too. It's a beautiful thing. That's a good bet. I like Elka, what's going on?
Hi, Tom. I'm so close, but I can't come.
Oh, you can't?
No, you were in Boston, weren't you in Boston yesterday and the day before I called in?
I know. You know what? I realized I was on the plane, and you and Arthur were here yesterday, right? Is that what happened?
Yeah.
Oh, I couldn't believe that. That was crazy. And you know what I figured? And I went to Regina's. I got off the plane.
I knew it, yeah.
Went to Regina's and then went to my appointment. Oh, I can't believe
it. Okay, so we were supposed to have lunch in Florida, not at Regina's. You mixed this all out.
No. I know that. No. I gotta take you out. I gotta go get. You call. You gotta call me. I'll find out. I'll get a good restaurant near you, and we'll take care of the restaurant bill for you. No, I gotta get you some.
No.
Yeah.
Are you out of your mind? No. We're doing it. No, we'll come back in October. I want to meet you. I want to see you guys. No. We just won't. It's too tough right now.
Okay.
And the weather has not been that good, and we have a project we need to. We're building a bar, so we have to finish this bar, so when we come back, we can have some drinks there instead of...
You building a bar down here?
Well, we have a little place that we bought, and so Arthur is building, we're renovating it, and so right now
awesome.
we're in the midst of doing some projects, so I'm saying, no, I can't, so we have to, we have some, but anyway, so, yes, you did lose.
I know.
This thing.
Back on topic. We are excited about the bar being built, though.
Now it's going to probably collapse and stuff like that. So, but
you know what the best thing was, though? It was so cool because, the reality is once I knew I was going to test the high, I just sat there and waited. So that was one of the best losses I've had.
I'm still stuck on your building a bar. So
I love it.
Say it again?
So I'm still stuck on the comment that you're building a bar.
Oh, yeah. Well, because you know what, this little place, so it's right by the balcony. We need to have it for those
Elka, stay right there for a second, all right? We got Elka from Boston, but her and Arthur are going to be serving some. We're going to have a traders bar in Florida. I like that. Darrell Mott, Tom O'Brien, we appreciate you being there, folks. We're going to come right back. The Dow down 13, Nasdaq off 15, S&P's off 2.5.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 18, Nasdaq's off 16, S&Ps are off 3.5. We're talking with Ilka from Boston. I believe we're going to be talking about that euro.
Yes, but so wait a second. Did you go really? You came to Boston for a haircut?
No, I didn't. I used to do that. I used to do that. Yes, I did.
Oh, okay. I thought
I had an appointment. So I just flew in.
That's okay. I just thought that's what I heard.
That's pretty good. I like it.
So euro. Yesterday. I mean, I enjoyed this beautiful ride down, but yesterday I went long. So did I for a little rebound? Do you see anything going, or this is no go really?
No, I think you had the right side of that trade. Particularly, you know why, Ilka? Because I was actually worried that you get stopped, when it spiked it. I love it when they spike those deals. And when I saw that spike, the morning of the 8th, do you know what I mean? When it gives it up like that. Yeah.
It did stop me, but I got out earlier because I had my stop we were closed.
Good for you.
Now I'm in that one contract again. So
yeah, no, I think you get big action. I mean, I think 134 is on the agenda, and that first to be 134.77, then the 134. What is wild here? This is almost set up, just kind of like the small caps in the market, So that correlation, I think we're going to see is pretty cool, man. So
you're seeing the dollar going higher, but the market going down, correct?
Yeah, the dollar wants to go a lot higher. This dollar. You had a couple different things happen, but when it spiked that low, well, first off, if we bring the dollar all the way back to the first expansion up in March, that first expansion, folks, when we went from 74 to 80 in one day, 79 to 80, 25 in one day, that says that it wanted to go to 81, that it wants to go to the top. We pulled all the way back. It did everything it should have done, and then it spiked that low. Now, the spike and the low was going into a sign of strength going back, and it never hit the bottom of it, which was the trip. You know, it was going into the initial sign of strength from February 2013. So it's like, okay, it got close. It was 78.91, and we got to 78.93.
Yeah.
Isn't that crazy?
Yeah, it was actually.
You know, so it's like, okay, you're going to go topside. And, you know, what does happen is this, is that, so we know the bonds, most people are on the wrong side of the trade on the bonds, okay? So in order to get U.S. bonds, you need U.S. dollars. The correlation of market going south, guess what? You know, people get worried. They want to go into bonds even more. They wanted to just get cash. You know, so I think the dollar was on the agenda. You know, like, fundamentally, they're saying Draghi might pull back in June, but who knows about the fundamentals. This euro, I mean, it's just way overextended, I think, compared to what the dollar is. You know, the dollar's still cheap, $80, man. 80, you know, 80's not a big deal.
So the correlation, what you're saying, can you talk? I will hang up. I don't have to sound right, but it's between the with the interest rate, as you're saying. Yeah, of course, you need dollars to buy the
that's right.
bonds. But I'm just saying. So you're seeing still the bonds? The interest rates will be going lower.
A lot lower.
Interest rates, huh?
Yeah. We're at 2.5 right now.
So the dollar higher, interest rate lower. What does that mean of our market?
It depends what market you're talking about. For the real estate market, it's going to be dynamite. For the stock market,
no, I'm saying stock. Yeah,
it's a problem. I mean, we're going to be in a big correction here. You know, I mean, I don't.
I called this. Remember, I got the VIX up right now.
Yeah.
Seasonally, I'm like, dude, we're at a low. It's going up. I was like, in the next 2 weeks, watch the VIX fly up and watch the market fly down.
Yeah.
Okay.
You know, I don't.
No fear in the market. It was
yeah,
time.
Zero fear. And no, what you do have, I mean, if we're talking just fundamentals, what you have, I've never heard so much bullishness that and it's really a weird one this time. This with and I'm talking about going back 20, 25 years, folks. This one here is that everyone's making like a million type of excuses why the market can't keep going. You don't even have to be a bear or a bull. Markets never go up forever. It's just a normal thing. You know, this has been an nice expansion. Yeah. You know, so it's
all right.
Well, listen,
very good.
I'm so sorry I missed you guys. Next time.
I tell you, I don't know what I'll do about that one.
That's pretty.
You went to Regina's when I came to Florida, you know?
I know.
No, this is good. Did you enjoy it at least?
Oh, are you kidding me?
Oh, man. You didn't bring me back any.
It was pretty sick. Folks, I do this every time. I get off the plane and take a cab to Regina's, then go to my meeting. It's like seriously.
Priorities. Nice. I mean, really.
Priorities are important. Exactly.
Yeah.
Okay. Have a great one. Have a safe one. You stay right there, folks. Darrell and I are coming right back. We have the Dow right now down 29. Nasdaq off 23. S&Ps are off $5. We get gold flat at $12.94. We're going to come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. See the banner on the top, on the side. You can hit that banner, bring the account up. It'll take all of about 3 minutes. They'll put $25,000 of paper money into your account. You can get trading this outstanding product. Don't forget, Darrell has a program each and every day right here at TFNN, 1 to 2 Eastern Standard Time, traded each and every day. Let's go to Marie in Erie, Pennsylvania. Hey, Marie, how you doing?
Oh, we're doing fine. Cold, but we're doing fine.
You're cold. Oh, this is... You people have got hammered. You know, when I was in Boston yesterday, Marie, right?
Yeah.
It was like, I guess it got nice out the prior day, and, you know, of course, everyone was out. But that's all you heard about how bad this winter's been for you folks up there. It's
it's been bad. But Tuesday we were 88 degrees.
Yes.
Now we're barely 50.
Well, you know what's amazing is that this morning down here, folks, okay, and it's going to be for 5 days, it's like 75 degrees, and that's unheard of in the middle of May.
Yeah.
It's gorgeous out. It's like amazing.
Yeah. Oh, you're in the promised land.
I think we are. I think things have really changed. You know, I was talking to Nico about this, and it seemed, folks, I'm not kidding, it seems like last year, the year before, every summer is getting a bit cooler. And it seems like it's lasting longer. Now, what seems to happen is that September and October still stay a little hot. But it's going longer that you really have very pleasant weather. So it's... Because all we really need down here is like 3 or 4 degrees, or maybe 5 degrees lighter, and that would be like unbelievable, you know. So.
Well, I tell you, we'd love it about here. But,
no doubt. So we're going to look at the TLT, right?
Yeah, I was wondering, is that a 3-gap play that it completed yesterday?
I don't think so. So let's take a look at it. So the TLT, folks, is the iShare 20-year Treasury ETF bond fund. And the low for the year is 101. The high is 118. Now, what Marie's talking about, a 3-gap play, okay? The way a 3-gap play works is this, is that you get 3 gaps, which, in fact, we have. Well, here, let me explain it. And what we have now we have a high volume high inside the marketplace, which is 114. So to answer your question, yes, it could be a 3-gap play. Because the way the 3-gap play works, folks, is this, is that you have the gaps all the way up first. In this case, wherever the gaps are, that is the bigger trend. And what happens in a 3-gap play is that you can come back and fill all the gaps, and then you start again. Now, the reason that I suspect it's not a 3-gap play is that when we take this, well, 2 different things end up happening with the TLT. The TLT is predicated off of how the bonds trade, the 20-year bonds trade, okay, 20-plus bonds. So what happens is that, as you can see with this chart, there's gaps all over the place in the TLT because the bond market, of course, is trading all day and all night long. So the gap structure inside the TLT, you know, really you can't depend on it.
Okay.
When you take a look at the TLT and we put this on a monthly, what you're going to see, and this is important, folks, in the context of if you want to really understand the bond structure, number one, and what bonds have actually done. The TLT is screaming that when we went topside in August of 2011, we went from 97 to 112, and we did that with 499 million shares. Now, you know the out of time in the trade, you get a breakout, always likes to go back to the breakout. The real key is how do you get back there? Do you go back there with lighter volume? So watch what had happen. You go from 97 to 119, monster volume, 400 million. You get to the highs, which is 132, and then you pull back. And when you pull back, the first time you pull back on a monthly, it's 197 million versus 489, and then you test it with 146. There's no sellers. Now, this certainly doesn't have to go to the high again, okay? But what you have is that it's starting to eat right now. It's at the beginning of ice. And, you know, I suspect we're going to try to eat through ice. You eat through ice, and that's saying that, guess what? The TLT is going to go to 132. And if I bring this back on a 10-year basis, what you're going to actually see is that, let me see, I don't even think this did a 50% retracement, which would be really crazy. So if I brought it, I could do 2 different things here. If I do the most conservative one, if I do the most conservative one, it did over a 0.618 retracement from the lows generated in 2010. So that would be saying that the most it could do on this run is go up to the highs and test the highs. That's how this is set up right now. But
so you're talking the high of 130?
Yes, I am.
Yeah.
Yep. Exactly.
Okay. Do you think we'll consolidate for a while before we make a run through that ice, or?
It would seem that we have to.
Yeah.
You know, because what happens, folks, is that ice is very tough to get through. What we do have, though, let me just show you. What we do have is that the 30-year, the 30-year is on the run right now to 139, 141 probably. The 10-year is in the middle of an A to B equals C to D. And when these runs get going, which, you know, the A to B and the, let me just get this up, and the C to D is a straight line move. Yeah, see, the 30-year right now, when this broke through, folks, this broke through yesterday, the day before, monster volume. We did 2 million contracts yesterday. So this baby is set 121. You get $4. You're set for 127 right now. That's going to put some big juice into this. You know, I suspect what you'll see, if we go back to the TLT for a second, is that the TLT will get into the 114.5. You know, it won't eat the whole ICE deal up at the beginning. You know, it'd be very unusual if it did. Let's put it that way. But I suspect, as you just said, it will build some cause for higher price. You build cause for higher price, folks, and you can go a lot higher. So, and there's, you know what? This is what's going on too, folks, in the bond market. In the bond market, you know, everyone was talking about Armageddon and our deficit and all this. The deficit is going down dramatically. It's going down dramatically. What the Treasury did last month is sell less bonds. Okay, so it's like there's less supply, there's more demand. That makes a big difference, you know. So,
is there another index that you would trade instead of the TLT?
If you were going to
the benefit from the bond prices.
The one way to benefit from the bond price, okay, is find a good dividend in either the electric business, the phone business. Those deals really work, Marie. Do you know what I mean?
Okay. I've noticed the phone. I saw AT&T has come right back to life.
Yeah, listen, you can look at Verizon. Verizon right now is an ABC up. Verizon's paying. Okay, so let me just look at this for a second. Now I own Verizon. I've owned it forever because my mother used to work for AT&T, and I never sold the shares ever. So Verizon is paying 4.32%.
Nice, yeah.
And you know, that's a big number, you know, and it's like I don't expect a lot of price gain on it, but you will get.
You get paid while you're waiting.
You get paid while you're waiting. It's 14. So yeah, it's an ABC up though. Watch this. So 45.85, 48. So it's only $3, but so that's going to 50.64. Oh, it's still $1.50, but it's 4.5%. So.
Yeah, so dividend payers are going to be the better stock.
That's right, because when bonds going down, dividend payers are good. When bonds do top out, that's when dividends get whacked in a big way. But, you know, these phone companies aren't going away. They finally figured out how to make money. They figured that out a couple of years ago. But
Do you think interest rates will stay low for the whole year?
Yes.
Yeah.
We're on the other side of it right now. We haven't even got to ICE yet. Yeah. In the 30-year. So if you look at the 30-year, US 1, watch this. If you pull the 30-year up, folks, I'm going to do a continuous contract right now. We're at 137.24. A normal bounce, even if you're bearish, a normal bounce in the 30-year is 143.11. That's 5 points away.
Yeah.
That's big, and that's a normal bounce. Even if it wants to pull, even if after. Since 1980, even if it's going to change into a bear market. You know, the bonds have been in a bull market since January 3rd of 1980.
Well, I read an article yesterday that this guy surveyed, I don't know which economist, but about 70 economists, and every one of them said interest rates are going up. And I said, well, you can't have a better sign than that.
Yeah, that's a fact. I know.
They got to be going down then.
It's weird, isn't it?
Yeah.
It really is. You're right. You know,
it's going to be good for the Tiger Real Estate Fund.
It is. It is. The rates have already gone down dramatically, you know, just in the last 3 weeks. But there's no doubt. And, you know, we're sitting in a sweet spot down here because what Marie's talking about, folks, is that, you know, we have the fund. We're in Pinellas County. And what you do have is that the offset in Pinellas County, unfortunately, we're still running 600 to 800 foreclosures a month. The rent structure is high down here, and the coming in is not big. The last 4 months, there's no doubt there's still a supply, but that supply that's coming on the marketplace, you know, people still want a little bit too much money, but that supply really has to do with they think they get 400, 500, 600. So that level there's still quite a few houses. Underneath that, there's nothing. There's nothing. Mm-hmm. And then what is interesting is that the houses that are running at $1 million right now are starting to sell. So, and the job structure is getting a lot better down here. You know, so check this out, folks, and come down to Florida because I'm telling you it's happening. The tax structure, so we have this bed tax and you have the sales tax and all that. They've never taken in so much money in Pinellas County because we have the best beaches in the world. You know, so that structure is going up, and the tourist business is here. So it's interesting, you know. So.
Well, I appreciate your help, Tom.
Thanks so much, Marie. Have a great one. Have a safe one.
You too.
Let's go to Mike in Dallas. Hey, Mike, what's going on?
How are you doing?
We're doing great, man.
Darrell, I wanted to ask you this.
What you got?
On the daily spreads on the Nadex,
Yeah.
do you find that you get better risk-reward if you're looking at the dailies around 4:35 in the morning?
I'm not looking at them that early because I'm asleep.
I know.
But
I know.
you would on the dailies. You really it depends on where it's at in relation to floor and ceiling. So yeah, I mean, if you go in there at 6 o'clock at night, it's not that your risk reward is bad. Obviously, it's still good, but you have more premium because there's more time till expiration. So the closer you get to expiration, the less premium there will be in a option. Okay.
Correct.
The closer you get to a strike, the more premium there will be. Okay.
Of course. Yes.
So the closer you are to the center of the spread, or deeper in the money is what you call it on an option, like it'll be less premium. So if the market's moved up, then there'll be less premium. If so I guess at fourth, I don't know if at 4:30 you necessarily have just less. Are you talking about comparison to like 6 a.m. or something?
He wants to wait to 8, man. I wouldn't be trading these at 4, Mike. I've looked at them at 4, 5, 6, 8. After 8, man, you're in heaven. You're in heaven.
Okay.
Yeah.
Okay. As an example, this morning with the market going down, Tom or Darrell, have you looked at to see what the DAX had done overnight to give you kind of a warning?
What happens is that when you get a day like yesterday, Mike, right?
Yeah.
It takes a lot of energy out of the marketplace.
Yeah, it goes flat.
Yeah, so what happens is that the DAX was going down, but that had to do with because we went down so badly. So, like, the way that the market is trading today is, like, perfect for all of us, okay? Meaning that on Sunday night, if you're doing some currencies, I think there's going to be real action. On Monday morning, we'll see if the action's there. Tuesday, I think you're going to have big action. And it has to do with the breadth, meaning how we came down. It takes a lot of energy to get crushed yesterday, which we did. You had the expansion of volume, you had the wide price spread, you had all of that, right?
Yes.
So,
and you got Friday.
Yeah, right.
Right. And
look, one of the things to do, and Tommy, you're right. I mean, it's one of the things I've talked to a couple of the traders about this week. I'm like, when you see those massive moves, and here, like a simple measurement for you, 75 points or more on the Dow. Okay, just to give you a hard number. Go back on your charts, and just pull up daily bars. Make it really fast. Okay. If you get a 75-point move on the Dow, look at the following day and see how many of those days are often flat.
After a 75-point move?
Yeah, the day after.
And that's up and down, by the way. It's about energy. That's what it really comes down to.
I mean, I'm not trying to give you an exact rocket science formula.
Right,
I'm just saying it's a very simple way to give you a measurement to measure, like, what is a big move, right? So that is if you go back and look at that, you'll see what happened the day after over and over and over again.
Okay. Well, thank you all very much.
Thanks, Mike. Have a great one. Have a safe one. You stay right there, folks. Darrell and I are coming right back. The Dow right now is off 4. Nasdaq's down 15. S&Ps are off $1.50. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Technology to these massive long-term profits and the tech info from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We have the Dow flat out here. Nasdaq's down 13. S&Ps are also flat. We haven't done gold yet. Let's go take a look at the gold market out here. That baby GCM4. Okay, so look at the sideways move. Okay, so we're at 1294. Oh, I like what happened yesterday. Okay, so check this out. This is pretty cool. So yesterday, folks, we get to a price point of 1307. You do 147,000 contracts. That was pushing into 120. Today you get 86,000. This is building cause for higher prices. It's building cause to basically get back inside this 1328, which is going to be pretty cool. It's been teetering. There's no doubt about it. But you've tested the lows. That is subtle yesterday, what we had happen out here yesterday. Let me go look at the silver market for a second. But I like what you were doing yesterday was that you were pushing into that high swing point with expanded volume. And what you find is that it is subtle, but when you do that, that little baby wants higher price. If we go over to the silver market, we're going to be looking for its confirmation, and you got it. Okay, so watch. With silver, you got to 2005. 43,000 contracts on Wednesday. You start pushing again with 44. So what you're actually going to have on silver, which is pretty neat. Yeah, you're going to have you're going to have a higher swing point on a weekly basis with volume, you know. And now you're backing down today with 25,000. She's going into 43. So that setup's not bad, man. Gonna have some big action next week, baby.
We're gonna have a good week.
Yeah.
So, and I mean, like I talked about, I was like, I pulled up the seasonality over here on the VIX. I put the S&P right next to it.
Yep. Let's take a look at that. I got it up. I got your chart up right now. Yes.
All right. So it's one of the cool features inside Thinkorswim.
Yes.
So, you know, I use a couple different platforms for different services.
Right.
And so right here on the VIX, you can see how it's popping on up right here. Okay, and this is the seasonality we're looking at right here.
Right.
So you can see, like, not only were we at just an insane low, if I go back and look at it, I mean, we were so low. And this is back on 512. And I'm watching this, I'm like, all right, it's time for it to pop. And the only way it pops is if the market drops.
Right.
Okay?
Right.
And so you're looking at this, and I mean, massive move up. So therefore, I'm like, all right, well, based on that, I expect here in the next, you know, over the next few weeks that we're going to see the market pull down.
Sure.
And so we go over here, look at the same thing. There's the 512. Okay, it starts dropping. Okay, let's go down here. We look at this, and you know, we're a little early on the seasonality on the drop, but it's still pulling down. And then the market usually seasonally. Now there are oscillations. It's not like a straight line.
Sure, exactly right.
But seasonally, we're looking for the market to go down till about the end of June, about June 24th or so. That's the seasonal cycle.
That's interesting. Yeah.
So.
Because
which would actually put us a little bit
now,
past
you know,
the seasonality of the VIX.
Right.
Yeah.
Which is cool here, folks, and you know, is in the context of where we are now. Lows love to come in October. You know, they actually, you know, basically come in at September, but the bottom line is that you're coming back up, but they're made in October. You know, we're going to have, let's see, so what? June, July, August, September, October. That's 5 months of dynamite, high volatility trading. And what you'll get in the middle of that, you'll get some kind of a summer rally. I mean, that's just how it goes. But my take on this is that all the surprises will be to the downside, you know, and they'll come out of nowhere, by the way, okay? That's how this mostly trade plays out. In this particular case, what you do have is that the fight on the other side is absolutely amazing, meaning that you can't have corrections. You stay right there, folks. We got our man, Mr. Basil Chapman, coming up next, then Nico and Paige. Darrell, we'll be back with you at 1 o'clock. David White, myself. Darrell, thanks so much. Have a great one. Have a safe one. Look forward to the show this afternoon.
All right, thank you.
Thanks,
Sounds
folks.
good.
Have a great one. Have a safe one. You stay right there. Basil Chapman's coming right up.
Right.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.